So I've made a few videos on Nio Stock recently, and while I touched on the bear cases in those videos and the risks of owning and investing in a business like Nio, I feel I need to create a dedicated video on this to keep the perspective balanced on this company. And I'll say this up front, having more than even a couple of percent of your portfolio dedicated to Nio is a high risk play. Nio is not a company that I would consider a safe stock, not a blue chip stock by any means. And the bottom line is it is a high risk play and you have to adjust accordingly. I see a lot of you guys saying you're going all in on Nio. You have 10, 20, 30% of your portfolio in Nio stock. And in my opinion, I believe that that kind of exposure, although if things work out, could make you a lot of money, does require a high risk tolerance. And if I'm being honest, you have to pretty much be ready for some really big losses in that situation. Now guys, whether you're bullish, bearish, neutral on Nio, smash that like button down below, show your support for this channel, and let's get at least 2,000 likes on this video. Okay, so let's start off talking about the first risk, which is kind of like a more broader risk here. It doesn't only apply to Nio stock, it also applies to other foreign stocks, specifically Chinese stocks that I'll be discussing today. Businesses that aren't based in the US inherently, in my opinion, hold more risk because there's less regulations, less scrutiny, and the SEC has less control on these companies. The SEC, if you're not familiar, stands for the Security and Exchange Commission, and they're designed to protect investors, maintain fair, orderly, and efficient markets, and facilitate capital formation. As retail investors, we rely on the SEC to keep companies in check, to make sure that they are heavily scrutinized and analyzed for any funny business that they may be doing. This helps to keep companies in check, and it pretty much gives the SEC a good look into what the company's financials are like, what they're doing, and all this kind of stuff on a very deep level. And this in turn leads to reduced fraud in companies that are registered in the US. Of course, the bottom line is that investors are protected because of the SEC. And when a company is foreign and the SEC doesn't have as much of a hold on it, there's less protection for investors. Now, businesses in the US typically file 10K and 8K reports, which are annual and quarterly reports. However, businesses that are outside the US typically do not file these reports with the SEC. With Nio and other foreign stocks, they do file some reports with the SEC though, and we can see here that it's mainly just these 6K reports. And you may not be familiar with 6K reports because if you don't own any foreign stocks, it doesn't really apply to you. The purpose of these 6K forms is to relieve the burden of dual reporting for certain non-US issuers. And guys, apart from the annual reports, the 6K form is the only form required of foreign issuers and must be submitted in English. So you can tell that regulators here are a lot more lax when it comes to foreign companies because the SEC doesn't really have control of these businesses and a full look into their financials, apart really from what the companies choose to give them outside of these reports. Now, most of the time, it may not really be an issue. You have massive giants like Alibaba, for example, that's a Chinese company listed in the US, and there's so much money flooding in from hedge funds, US retail investors, and this has pretty much driven the market cap in Alibaba to some incredible heights. And really, the justification is that the risk in a company like that is very low because it's such a large company. They have such a massive footprint in China, and while there may be risk, it's a lot lower than a stock like Nio, for example. Now, for those who are overly confident, just remember what happened recently with Luckin Coffee. Luckin was also a company that had high hopes, high growth, and had a lot of US investors interested in it. And then bam, after the fraud was leaked, the company ended up getting delisted from the US exchange. Now, while foreign risk is real here with investments, the next couple of things I want to discuss pertain directly to Nio stock. Now, the first thing I want to discuss is the financials of the business. Here we can see from HyperCharts, it shows us a breakdown of Nio's net income on a quarterly basis. They seem to be losing a couple $100 million regularly, which begs the question, when can they ever see profitability? Nothing seems to be getting better on this front, and as they continue operations, they continue losing money. We also know from my previous videos on Nio that they need to keep raising cash because burning cash at this rate is not sustainable for long-term success. One common way to do this is to issue more shares, and that's exactly what the business has been doing, issuing millions more shares to flood the market with, making existing shares worth less. No, not worthless, just worth less. This automatically adds a risk to shareholders because companies that have to continuously dilute their shares over and over again to keep raising cash reduces the value of the stock and in turn reduces confidence in shareholders. Now, the other way to raise cash, of course, apart from diluting shares, is by raising debt. This is also something that Nio has been taking advantage of recently. They recently announced that they landed a $1.5 billion credit line in China, adding a nice cushion should they need this capital to survive if liquidity becomes an issue. I know it's not something that many new investors really consider or care about, but bankruptcy is very real and businesses that burn cash at a higher rate have a much higher risk of going bankrupt. We've seen a few companies in the last few months file for bankruptcy, and as the global issue continues on, I believe we'll continue to see many more companies go under despite intervention from around the world from central banks. Many investors say, oh, Nio is backed by the Chinese government, so they can't fail. But guys, this is flawed logic in my opinion, because yes, while I agree the Chinese government wants to see a local EV player succeed, they're also looking for the most profitable venture for them. Remember, Tesla is the only manufacturer outside of China, I believe, that has a plant in China. So the government there already has Tesla on their good side, and this could be really where they focus their efforts on to help Tesla succeed in China for local consumers to enjoy the product. This is because as Tesla succeeds, China gets more money from them indirectly as well. Remember, in the end, it all comes down to money, and I believe the government will make the most financially beneficial decision for them. Now, the last risk we need to talk about is around the product itself that Nio creates. EV makers are popping up all over the world and competition is getting fiercer by the day. The problem with Nio here is that they don't make their own cars. JAC Motors, which is a state-owned Chinese automaker, is the company that actually builds these cars. So if Nio was to go bankrupt, another business, maybe JAC Motors, comes in and just buys out the design side of the business and then continues producing these cars. Not much of a hiccup goes on there and JAC Motors continues on. However, if this happens, Nio investors today would most likely get wiped out because the Nio company would have failed, even though the product itself can continue being developed through JAC Motors. Up until recently, demand was also a concern for Nio, but they posted very strong results in Q2, which has brought back some optimism. But guys, what if it was just a one-time thing and the next quarter we go back to mediocre growth or even declines? If that happens, the story will change once again, the sentiment will change once again, and the stock will most likely see a significant sell-off once again. So the next earnings reports for Nio is going to be an extremely important one. A lot of eyes are going to be on this stock, and it's going to be a decision really that investors make at that point if they want to add more money into this company or remove their money because maybe it was just a one-trick pony, they had a good quarter, but now things start to decline once again, and they don't want anything to do with the business anymore. So really, it's crunch time. Anything can really happen after this earnings report. I'll be watching, that's for sure. And if you guys want to see an update video on that when Nio releases their earnings, or even some updates on the July numbers and August numbers when that happens, let me know in the comment section down below. So guys, now you know that in my previous videos, I've stated that Nio is such a small portion of my portfolio that it's almost negligible at this point, even though it's run up so far. And because it's so speculative and so high risk, I don't want to have a high exposure to it. Sure, I could have doubled my money. Sure, I could have tripled my money here, especially at these prices right now. But remember, when I bought the stock around $5, almost $6 per share, it ended up going down to about $1 per share. So there were some huge paper losses, and if I had a huge amount of my wealth in Nio stock at the time, it would not have been a fun time for me, even though those were just paper losses. Things don't always go according to plan, and as a result, I think it's always smart to be diversified, manage risks, and when you have a high risk play, sure, sometimes it makes sense to put an investment, some money into it, but having your whole life savings in it, not a smart decision in my opinion. But hey, I'm not a financial advisor, and whatever you choose to do with your money is your decision. And let me know in the comment section down below how you plan to play the next earnings report for Nio. Are you going to be buying more stocks before? Are you going to wait and see what happens and then buy more shares? Or are you going to sell out of your shares before the earnings report? I'd love to hear your thoughts, guys, in the comment section down below. But either way, thank you so much for watching. Thank you so much for the recent support you guys have been showing me. I truly do appreciate it, and I hope you've been enjoying these daily uploads. Thank you for watching, guys. Don't forget to invest positively, and I'll see you in the next one. Peace.